This is CPA Berkeley video series. Today we are going to discuss Unit 19 and 20 of BEC, that is Business Environment and Concepts. These units are purely concerned with the cost accounting and management accounting. We are going to discuss the costing fundamentals, costing systems, and variance analysis. Broadly, we are going to discuss different kind of cost, that is cost terminologies, and we will discuss CVP, that is cost volume profit analysis, which is every owner is interested to know that what is the cost and at which level of production he is going to have his investment recovered, and where there is no profit and there is no loss, and it's a point called break even. Anything above will generate profit for him. Then we are going to discuss the absorption costing and the total which is another name for total costing, and we will see the marginal or variable costing, in which we just keep in mind that variable costing will focus only, it will consider as a cost for a product cost, that is direct material, labor and manufacturing cost. While in absorption costing we have to take the product cost and we have to add the period cost as well, which I will explain in detail in the later portion of this discussion. Then we have to discuss the joint cost and byproduct costing. This is for those, like if we are doing for a process costing in which we are extracting some oil from the well and we are processing it, then at one point we are going to split into different products. So what is the point before, what is the split of point, what is the common cost, and after this what are the different costs we have to encounter. This is we are going to discuss in detail. And then job order costing. If our manufacturing is like this, that we have different kind of jobs. Today we are making shoes, tomorrow we are having a t-shirt arrangement, and this t-shirt is for the youth, and then next day we have a baby garment order, then we have another job. So we cannot set up our machine into a fixed phenomenon. We treat each order as a job, and for that we have a job order costing. Job order costing generally takes your material, your labor, and your direct and indirect expenses, and it come up with the cost which is we consider as a guideline cost for the product. Then we go ahead for the process costing, which is in certain, suppose we are going in a textile production, they have different departments, then one department work is the base of another department, so the cost is transferring from department A to B, B to C, C to E. So what would be the process costing, how we transfer the material, labor and work in progress. This is we will discuss in detail. Then we have activity based costing, which is surely a sophisticated technique which gives more accurate method to divide the indirect expenses and to reach a reasonable product cost. In activity based costing, we believe in terms of activity and the cost drivers. Then we make cost pools and we define the activity drivers, which we will discuss in detail, but this is a very sophisticated form of cost allocation. Or surely when a manufacturing company have manufacturing departments and they have a service department also, while allocating the production cost to the service center, what are the methods we can use to allocate the cost on service center. This is we are going to discuss. In the last portion we are going to discuss the standard cost and variance analysis. We will define the standards. We have already made the budgets, and we will see the differences. What is the practical standard, what is the ideal standard, what is the theoretical standard, how the variances comes, and what is the difference between each variable. Now we will start our discussion from our first topic, that is the different kind of cost and terminologies. There are three kinds of accountings. One you heard about financial accounting, one is management accounting, and last is the cost accounting. Financial accounting is generally for the external purposes. Whatever financial statements we make or issue, the auditor comes, check and issue the financial statements. This is based on financial accounting principles. But opposite to this, we have management accounting, which is for the internal usage. Like we as a CMAs are more focusing on management accounting, which don't have set formats. We can make the reports based on our needs or our owner understanding. If owner understand that opening balance should come in the bottom or closing balance will come on the top, we can make it like this. But in financial accounting, we cannot do like that. We have standard set rules by international accounting standards, so we cannot do anything about it. And cost accounting supports both financial and management accounting. Now just let me give you, for any product, suppose this is a car, this is a controller, this is a chair, or we can classify broadly in three components. The first component is every product is made up of material. And then obviously material will not automatically join, we need someone in labor. Even we have an automated plant, but still we need someone to own the button, off the button, so we need a labor for this one. And apart from this material, labor, we need other expenses, which is technically in cost accounting term, this is called overheads. In accounting, we don't use word overheads, we use expenses. But in cost accounting, these are the overheads. So generally, all products in the world are based on material, labor, and overheads. Now, the material which is directly identifiable in the product is a direct material. We have two types of definitions. One is direct, one is indirect. Direct expense or overhead is something which we can directly locate in the product. For example, in this product, we can locate the plastic, that this is the plastic, and we can assume how much the labor could charge for it. But what are the salaries of accountant, CFO, the secretary who is attending the phone, how many people they have, what was the heating or lighting bill, this we cannot see. So that's why that certain expenses become indirect. And few expenses we can see directly, that is direct material and direct labor. So whatever costing we have to do is most of the cases is for indirect expenses for this portion, this portion. Because this is based on our feelings. Suppose we invite some guests at our home, these are 15 numbers, we bring 30 kg, you can say chicken for them and other ingredients, and we hire a chef, he will charge us for 500 dirhams for the full day. Now, the discussion is about indirect expenses. We provide him a kitchen, we provide stove, we provide all the amenities which is necessary to bring this material and labor into a finished product. Now, what expense we should charge? Should we see, if I ask what is the cost of your this function that you did, you can say this is the material, this is the labor. This is one concept. This is called marginal costing, variable costing. We only take variable cost. But someone can say, okay, if you don't have the kitchen, you don't have stove, you don't have micro oven, you don't have the heating, lighting, so it was not possible for you to. So what is this cost? This is also a cost. If you go in some other place, you hire a full set of facilities, they will charge you, right? So only variable cost is not a cost. We should put fixed cost, means the indirect cost, into the total product. So then you can say this is the cost of the product. Now imagine Nestle, Procter & Gamble, the chocolates, in a factory, they are producing 100, 200 products. But the staff, machine, depreciation, the office equipments, printer, administration, HR is the same. So how to sell, how to make a product cost is quite technical to understand. Because this product is going to give you a profit. If you know this, your material, your labor, it's easy to know. You bought 100 kg for soybean oil, you hire 5 employees, okay. So direct part is clear, but indirect part is very critical to understand.